One of the biggest home buying myths is that you need 20% as a down payment before you can ever enter into the housing market. And that is completely not true. Why is it a myth? Well, I would venture to say it is a myth because back in the day, back in the early days of being able to finance your home, that was a requirement. You had to have 20% down to get into a home. In fact, probably when your grandparents bought a home, they had to have even more than that. Things have changed since then. And now we have things such as PMI, private mortgage insurance, which comes in and gives assurance to the mortgage lender that if that loan goes belly up, they'll be made whole. The reason for the larger down payments is to avoid risk. And it minimizes the risk of lenders when you're putting a larger down payment. With the lower down payment, in order to shore up that risk and make it a little bit more comfortable, so to speak, for lenders, then we introduce private mortgage insurance, which fills that gap. And then you can get in with a lower down payment. Those lower down payments can be as low as 3% if you're a first time home buyer. If you're a repeat buyer, you can come in with 5%, 10%, and you can even make up your own percent. You can do 12.5% if that's where your comfort zone is, or if that's the cash that you have that you want to spend. So you don't have to be uh, tied exactly to those exactly 5, exactly 10, exactly 15, or 20%. But 20% down is a myth. However, there was a time, a long time ago, where it was required. It is not required and has not been for many decades. So, if you're thinking about buying a house and you have a small amount, not the 20% down to put into the house, let's take a look at your numbers, see how it measures up, see what that private mortgage insurance is going to cost you, see if it makes sense. Only you can decide that answer.